Hello and welcome to a brand new episode of ET Markets Smart Talk, a show where we engage with top experts to provide complete insights into current market trends and the impact on stocks and sectors. Well, my name is Shatajananda, and today we have with us a very special guest, Abhishek Banerjee, who's a small case manager and CEO and founder of Lotus Dew Wealth and Investment Advisors. Welcome to the show, Abhishek.
Thank you very much and glad to be here.
Thank you so much for taking the time out, Abhishek. And today, I think we are discussing one of the important topics, which is the SME. And in fact, the SME platform has seen a sharp rise in the listings in the last 3 years or so. What's driving this surge in participation? Because you very closely track this sector.
Sure. So it's a very risky sector. There is a lot of companies that are listed in this SME platform, and
True.
the experience has been very mixed for initial investors. So just to put it in context, for the viewers, SME means small and medium enterprises, and
Sure.
this is a special segment of the National Stock Exchange and the Bombay Stock Exchange, which are regulated platforms which provide public capital to really small companies, right? And this is
Mm.
unprecedented. It started in 2012, and
Right.
from then, the first few listings were about six listings, so six companies in that exchange, and then from
Right.
there it has now gone to 1,200 or so listing, of which 800 are trackable. But what I want to say is that then the daily liquidity of this market was 50 crores. Now it's about 1,200 crores.
Mm.
So, stupendous growth. But it's also
Okay.
been, one of the very risky markets. Lots of headlines that have come
Right.
out.
Yes.
So this SME market is essentially meant for small and medium enterprises that
Mm.
get disintermediated by banks as bank loans, or private equity, or informal loans into public capital. So it's a sort of like mechanism made by the government to enable smaller companies to access public capital. So there are many reasons. First is that obviously, once you get public capital, you go through a scrutiny process. So, you are
Mm.
supposedly able to kind of demonstrate to the world that that scrutiny has come through, and you are now eligible to be listed. Of
Right.
course, it's a large market in terms of public market. So, once you get listed, the further capital raise is important. Many founders find it quite glamorous to be, founders of
Right.
listed companies. IPO
True.
is kind of a dream outcome for many founders, right? And
Mm.
of course, they pledge their shares because typically company promoters, they might have a lot of assets, they might not have a lot of
Mm.
personal assets, and most of the net worth is tied within the company. So
True.
they tend to use this public pricing by as a way to value their shares, which they
Mm.
can then pledge to raise personal funds as loans. So many of
Mm.
these reasons were the reasons, but in the last 3 years, we have seen almost the number of issues double, right? So whatever was the market,
Exactly.
it just doubled in last 3 years, which is also extremely kind of large in a number of issuances. And of course, the SME index has produced eye-popping
Right.
65% return. So these are some of the reasons why this is attracting a lot of promoters to kind of consider.
Absolutely. In fact, the music continues in 2025 as well. And, so far in the year, we've seen more SME IPOs than the main board ones. So, the trend continues to be the same, or at least it is sustaining for this year's as well. And in fact, you've also recently launched your own fund tracking this SME space, Trillathon Hidden Gems, if I'm not wrong. If you can just tell us more about the AIF fund and how do you plan to leverage on the MSME growth potential?
So, just for the viewers, like, I'm founder of Lotus Dew, which manages this Trilithon Asset Management Hidden Gems Fund. It's a sister
Mhm.
concern, basically. But point is that when we started in 2019, we kind of thought that systematic investment in smaller micro caps wasn't available. So we built a 6-year track record where we were able to demonstrate very good returns for our customers by
Okay.
looking at these microcap market. Primarily, we use corporate governance, right? as a screening mechanism where we apply AI to score corporate governance of listed companies, and there's a lot of things that go underneath that. But
Uh,
what we understood is that this smaller company segment, it is often ignored for many reasons. First is that for a typical fund, even if they like a company, they might not want to invest because they cannot allocate enough capital for it to be a meaningful positions in the fund given the size of their fund. I'm talking about mutual funds basically. So then comes the
mm,
AIFs and PMS. For them also, the typical economics of a fund starts to work only after they raise 5 to 800 crores, and these markets do not are not able to
uh,
absorb that kind of money to make it a viable
mm,
investment. So then there is a gap, a solution gap in the market where there are some very good companies that are small, but there is
right.
no institutional interest in them because the amount of money that can be put into work around these companies is not enough to support the fund economics of a traditional fund manager who go through balance sheet. If you look at the number of if you include the SMEs and the normal companies that are less than
Mm,
1,000 crore in market cap, there are about 4,800 companies that are there, which you need to analyze. So if you do the math, five analysts, two PMs, couple of operations and marketing, you need a 15-member team, and the cost of running
yeah.
that team is so high that
um,
and this market probably has capacity of 200-300 crores, right? So in terms of institutional deployment, so there is a gap, and we have tried to fill this gap with this hidden gem scheme that we have launched. And this is essentially the reason we are able to fill the gap is we have built a lot of technology that uses public
mm,
disclosures from various jurisdictions to understand what are the corporate governance standards that are being maintained by these corporates, and use
mm,
that as a first filter instead of going through
mm,
balance sheet. There are crazy companies that we have found which are also interesting, because we have found companies that their market cap is two times their profit. So the yearly
okay.
profit that they're making, the market cap is only valuing them just 2 years of their profit, which is crazy. I think so
Right.
these kind of companies you get
Mm,
through in terms of screening, but it's also a very risky is the riskiest part of the listed market. And we are very
right.
excited that we really want to kind of offer the riskiest portion of the listed market, possibly for
Right.
the most rewarding experience.
Absolutely. Good that you laid that cautionary note that it is one of the riskiest markets to be in. But there's some positives as well. In fact, data suggests that 1,200 SMEs listed on the exchange and 325 have actually migrated to the main board as well. So, how do you view the SME board as a pipeline for a broader market integration?
So the good thing is, as you mentioned, that let's first understand how SME markets trade, right? So they trade like futures trade. They trade in lots. So you cannot buy one SME share. You typically have to buy a couple of hundred. There is a lot size, and
Mm-hmm.
what happens is while this trades in the while it trades in the market in lots, the moment it goes to main board or NSC, then you can buy one share. So you
Yeah.
can think of it as a stock split, right? So before you could
Mhm.
bunch up, you have to bunch up the trades in 600 quantity or 200 quantity, and suddenly you can buy one.
Right.
It's similar to 1 to 200 split. So that creates a liquidity tailwind. Typically splits create tailwinds in liquidity, and
Right.
this is so 25% has migrated, which means that if you pick the top decile or top quartile stocks, right, you're more
Mm-hmm.
likely to find that liquidity tailwind in the market. So that creates an incentive that if you pick good stocks, you might end up with that liquidity tailwind. There are about 5 crore MSMEs that are registered in India, and it's just growing faster than GDP. And the government of India publishes a lot of data, and you can see
Mm,
what's their authorized capital and aggregate revenue. They bucket it into different segments, and
mm,
looking at that data, we can already see that about 4 to 5 lakhs of those companies can actually pass the initial screening in terms of balance sheet requirement to get listed, right? So,
right, right.
and right now we have only 1,200 companies, and even if like 1-2% of them actually list of that 5
Mm,
lakh
mm,
universe, what you mentioned just now, that the number of listings of SME has exceeded the number of listings of the main board, we are kind
true.
of looking at a market where there'll be 10,000 plus listed SMEs possibly by in the next 10-15
Wow.
years, which will
Mm.
probably be double the number of listings in the actual main board. And it is going to be such a large universe. It's, unless you have special technology or special technique to
Uh,
scan this universe, it will be very tricky to invest. And more than 50% of the SMEs, if you invest randomly, would have lost money post IPO. So active stock
mm.
selection is going to be super crucial, and it's such a large universe. I mean, I don't know how traditional fund managers will approach it, if at all they'll approach it.
Absolutely good that you mentioned the active stock selection. And yes, 10,000 companies, it's a big number. In fact, main board, I think what we have is what, 4,800 to 5,000 odd companies, or, the upper
Somewhere,
limit.
yeah.
That is what I'm trying to put it across. But yes, with the 10,000 firms, the day, it's very near when the main market becomes the SME market, where a lot of action is happening, because the most of the primary action is happening in the SME space. But I'll stick to the, the active pricing point, or the active picking point for the SMEs, because 40% of the SME stocks are, sort of still trading below the IPO price. So how critical is stock selection for investors in this space?
It's going to be very important, right? I mean, if you look at the BSE and SME, even by the way, our fund, the Trilithon Asset Management Hidden Gem Scheme, it has 30 stocks. We would invest 20% of that fund only in SMEs. The remaining will still be invested
Mm.
in BSE and NSE microcaps. And there's a special
Okay.
segment in that fund where we will invest in BSE X shares. So these are shares listed on BSE, but not on NSE. Again, very interesting set of companies where we found a company which owns 90% of the world's nitrate market, and it's listed on BSE but not on NSE. And there are various reasons why somebody would do that. But the point being that it's very important to distinguish companies based on corporate governance, because these are really small companies. Their auditors will probably never audit another listed company, so you don't have a reference. These are some of the checks you need to do. How credible is the auditor? How credible is the firm that's being audited? What is their board composition? How credible are the people? And
Mm.
how credible are the numbers? We have found companies in SME that have thousands of crores of market cap, but the revenue per quarter is 3 crores. So that's kind of how crazy this market can get, and the prices
Right.
move very wildly. So liquidity is an important factor in the SME market. The liquidity is guaranteed by the market maker 3 years post IPO. So you have to check the quality of the market maker as a stock selection criteria as well, which is not a consideration normally in the NSE or the main board. So there are more
Mm.
considerations that you need to have before you invest in a SME company, and these checks and balances that are needed to ensure that at least you put out your best effort when picking a company is very important. And
Mm.
more importantly, even if you want to invest passively, there is not enough liquidity available across the
Mm.
stocks in the index to even replicate that index. So there is no passive option. There's only active option, and in active option, random or unresearched random picking would really hurt a lot versus, let's say, in a large cap.
Right. So, in fact, so can we say that liquidity is probably the biggest challenge for SME investors and the fund managers? Or obviously, discovery could be another part of it. Are there any other challenges or big challenges that investors as well as fund managers are facing at this point in time? What are your views on that?
So it is those are the two most important factors. Like for a typical fan manager, they are basically desk employees, right? So they are sitting at their desk and parsing through information. So it is very important to kind of have trust on the numbers that they see to
Right.
make decisions, and hence, and most of these companies, they are operating in across India, and possibly not in the heart of the cities wherever
Mm.
they're located. If you look at the composition of the SME index, a large portion of them are pharmaceutical manufacturers, manufacturers of capital goods. A
Oh.
large portion in healthcare, services, hospitals, as well as IT services. So these are typically tucked away in smaller places, and and the sheer number of these companies, it's not a viable option to go and scan physical locations very often. So that makes it even more important that you look at the quality of the people who are serving as the moral compass of the company instead of looking at the numbers first. And it's a very
mm,
hard thing to do, and hence subjective and hard. And whatever we can do through AI to, for example, has there been a GST default history, or how many
okay.
pin codes do they operate in? Are those pin
Mm,
codes they have a pin code ranking, because there are data that you can buy
mm,
where you can score pin codes based on the for something like how Amazon decides whether to ship a particular product to a pin code or not, and so on. So there,
mm,
these are these adjacent and secondary data indicators that you can figure out for a company before you dive
mm,
into these numbers. And hence stock selection and screening out what you don't want to spend your time on is the
right.
most crucial part for a fund manager, especially
Mm.
when looking at this universe.
Absolutely. And in fact, we could say that it is the retail first, or retail investors have sort of taken the lead in the SME investing, and institutions are following it. But how is that likely to change going forward? Because, as we see, probably currently 40% of the SME IPOs are still trading below the IPO price. And, we always have this history that, when people are not able to make money, they have this kind of distrust on that particular space, and they sort of move out of it. How is that scenario going to evolve in the near future? How are you viewing this?
So, if you remember how the Indian markets were before we had SEBI Act in 1992, let's go
Yeah.
back to, let's say, 1990, for example, a pre-Harshad Mehta kind of era.
Yeah.
There was no asset management company. There was just UTI, and there were plethora of brokers who
Hmm.
would provide brokered access to stock market, right? Where retail investors were the first investors, right? And they kind of looked at this market as an opportunity. So I look at the SME market as the same, as if our
Yeah.
markets were the broad markets were back in 1990, because
Hmm.
today the markets are small. Then also the markets were small, and it was mostly UHNIs in the retail category who
Hmm.
understood the implication, and they had the time to pass through what is the risk. And essentially for more UHNI, the reason they often tend to do this is that the amount of money that they can risk is worth risking versus their total portfolio. Versus where a smaller retail investor, it's a sizable investment. I mean, the minimum investment for one stock in SME is maybe 2 lakhs. So
Hmm.
if you want to build a portfolio of at least 10, 15 stocks, you're still looking at 20 lakh of investment.
Ah,
And often
right.
that's a size
Hmm.
which is hard to fathom for a
Hmm.
even a beginner investor. So
Hmm.
that means that it'll take a lot of things. But more
Hmm.
importantly, instead of technology or a way of screening this and making sure that you are doing a better job than what
Hmm.
an informed retail investor can do, and create additional
Right.
value for the retail investor, there's space for institutional coverage. I don't think any
Hmm.
like a large institutional research house would start covering the SME universe even in the next 3 years. But so that
Okay.
also gives us the headroom to kind of make a mark by our research, because it's just not viable if you don't have the tech that we have built over the last 6 years to
True.
scan and collect data through this universe.
Absolutely. And do you expect more thematic or passive index products based on the SME stocks to emerge in the near future?
So passive is going to be a challenge, but thematic might still be possible, because you
Okay.
can pick a couple of companies and then create a thematic basket at a
Mhm.
certain point. But passive is still I would say years away, right? Not even close. I mean, even if you look at the Nifty 50 index, which is a passive product, the
Mm.
total market where institutional investor has ever gone in out of the 4,800 stocks that you mentioned,
Right.
uh, only 1,200 stocks have ever been invested by any institution. So we have that data. So that just means that top 25% of the total market has ever seen institutional index. But of
Yeah.
that 1,200, Nifty 50 is only 50 stocks. So you
50.
still have a very narrow view
Yeah.
of the market when investing with index funds in India, which creates
Right.
its own challenges. That said, such a similar, let's say, a 20 stock SME index might
Mm.
be viable, but then you'll have to figure out quantitative investing techniques to replicate the total market by using a subset of the stocks, which is possible and it's often done for
Right.
passive indices. But it'll take some time because the moment you have passive index, people expect very close tracking to the index that
Ah,
it's tracking, and when you do not have an exact replica of the index, that the variation increases. The
sure.
technical term for it is tracking error. So this
Mm,
tracking
mm,
error is not not a good thing, right? You're really
mm.
investing to replicate the index, and you don't know which way the tracking error will end up. So yeah, I mean, passive is long time away, but active selection and active products in this market is
Right.
definitely the way to go. And we are one of the few to uh,
True.
kind of do this from an investing standpoint. There are some who invest as a QIB pre-IPO, and then post-IPO they try to get IPO pop, but it is also a hard thing to do because you
Yeah.
don't know how all IPOs will fare. And we like the post-IPO space because it at least gives you some track record, some extra data being public companies versus like a pre-IPO private deal where still you're trying to figure out data in
Yeah.
the data room that you get.
Mm. Absolutely. And so more active products could be something which we could see in the SME space. Passive is still some time away. But on that note, thank you so much for your time, Abhishek. And that's up on our Tuesday. Log on to ET Markets live stream more on investment and trading ideas. Again, thank you so much for this lovely conversation, Abhishek.
Thank you, and it was a pleasure. Thanks.